The first half of 2022 is behind us, and investors have seen a lot of red as Wall Street has worried about the possibility of a recession coming. It has been so bad out there that the S&P 500 even entered bear market territory, which is to say a 20% drop from recent highs. First, let's take a look at what has worked so far this year. It shouldn't come as a surprise for anyone who regularly fills up their gas tank that energy companies have done well. What's bad for our wallets, apparently, is not bad for energy companies. In fact, the sector is up by almost a third through the first half of the year, with companies such as Occidental Petroleum, ExxonMobil, and Valero Energy leading the charge. As for what hasn't worked this year, well, it's been a lot of things. Sectors such as consumer discretionary, communications, and information technology were all down by about 25% this year. These sectors had largely been beneficiaries of the pandemic economy when people were stuck at home and increasingly relying on online services to help with shopping and doing business. Many of these companies are tech-oriented companies, which typically trade at higher valuations than some of their peers. And this is because investors generally expect growth to be much quicker and much steeper than for other companies. But because these companies saw so much growth during the pandemic, Wall Street wonders if all of that growth has already happened and if these companies can continue that pace. Some of the companies that have been hit hardest during this time have been Netflix, which saw its shares tumble by more than 2/3 because subscriber growth has been low as people no longer are looking forward to Netflix and chill. Etsy has taken a similar tumble as people are shifting their consumption habits from buying things to doing things, something we haven't been allowed to do during much of the pandemic. And PayPal has seen a steep drop in its shares as investors worry that most of its high growth is behind it. One thing these three companies all have in common is they saw their shares soar during the pandemic, but now investors are worried about future growth prospects. So we've covered some of the big gainers and big losers in the market, but what about the sectors that are in the middle? One to take a look at is financials, one of my personal favorites. Going into 2022, investors expected that bank stocks would do well because the Federal Reserve plans to lift interest rates. When the Fed does that, the spread between the interest that banks earn on loans and what they pay in deposits should widen, which is good for bank profits. But when people worry about a recession, any gain in net interest income is not enough to offset fears of a downturn. And bank stocks so far this year have tumbled roughly as much as the S&P 500, even though the sector has proven its strength following the Federal Reserve's annual stress tests on the country's biggest banks. So while they seem safe, investors are still cautious because they're worried that profits won't be what they had hoped for. Now you tell us, what has worked for you so far this year, and what are your expectations for the rest of 2022?